So let's start the whole process and let's lay out the real objective here. The real objective here is to provide retail Forex traders, so you guys, with a systematic approach to predicting future currency moves in the same way that professional traders and hedge fund managers do so, so you can implement exactly the same approach and make consistent money from it over your lifetime. Now, the systematic approach starts with idea generation, but there is actually a huge shortfall in understanding and knowledge in the retail trader environment versus the professional trading environment in currency markets themselves. And what we have to do first is actually plug that gap. We need to basically understand the idiosyncrasies of the currency market, so we have a fundamental understanding and foundation of what currency markets are all about. And no two asset classes are exactly the same. Currency markets have different idiosyncrasies and details to them that differ from stock markets, commodity markets, and bond markets that we just have to learn. We have to learn these things so we have the foundation in order to build a real systematic process on top of that. Once we understand all of this stuff, we can really then move on to building a systematic process. Otherwise, if we don't have this foundation, we could find ourselves struggling with these idiosyncrasies when we build out a systematic process later on. So what we have to do is get all of this out of the way and make sure that everyone going through the video series as retail traders get this foundation and understanding of the idiosyncrasies of Forex markets. So what we have to do is get a foundation in the following areas. In video 1, we're going to look at the first Forex market foundation area, and this is the opportunity set. What is the opportunity set? Well, all traders, whether it's in the currency markets, stock markets, commodity or bond markets, all traders are really slaves to volatility. And what we have to do is define what our opportunities can and can't be. So we're going to go into the currency markets and look at most of the major and minor currency pairs across the world and actually define how we look at the opportunities properly. The second thing we're going to do in video number 2 is look at Forex market regimes. There's different regimes across different currencies, and we have to actually define these and really understand them. This actually helps us and ties in very usefully with defining our opportunity set. So we have to understand the differences between Forex market regimes. The third thing we have to look at is Forex market infrastructure. In terms of infrastructure, what we have to understand is our parameters that we're dealing with within the Forex market itself. So who are the players in the Forex market? How do we actually deal in the Forex market? What is fundamentally driven? What is speculative? We have to understand the parameters that we're dealing with and the limitations of those parameters. And if we learn this stuff, we can learn, therefore, not to do silly things and then operate within these parameters successfully and make consistent money over our lifetime. In video number 4, we're going to move on to some basic computational methods. So there's a lot of arithmetic generally in trading, but in the currency markets, there's specific arithmetic that we have to get a handle on. We have to understand how to do those things. So they just come to us as second nature. So when we start building out systematic processes, we can look at something and work it out very, very quickly and understand what's happening behind the numbers. So we're going to look at some basic computational methods that once we understand should be in your psyche for forever. And you should be able to react very quickly to very simple, straight, linear mathematics and work things out very quickly for the rest of your life. So then we move on to video 5 and 6, which is then moving on to more advanced computational methods. And Christopher Quill, who's the Institute's statistics analyst, is going to take you through some pretty advanced computational methods and train you on Excel in terms of looking and understanding volatility. So we'll be looking at and understanding how to look and get potential trade ideas from volatility. So we'll be looking at opportunity and risk by assessing volatility in the Forex market. And it's very important to understand that overall, what we're trying to do here as traders is always seek out volatile opportunities. And obviously opportunities bring with them some sort of risk. And as traders, we need to embrace risk because you can't have opportunity without risk. And as a professional trader, what you need to be doing is working out the most systematic and basic processes to understand how to capture that volatility. So Chris Quill is going to take you through all of that, and things do get pretty advanced, but once you're up to speed and you understand that stuff, it's going to be great for you, because over the rest of your life, you'll be able to download data and go through these processes and be able to very, very quickly understand whether there's opportunities or risk or both potentially, and be able to assess whether there's the ability to have positions that are going to pay you. So let's kick it all off with video number 1. And once we go through the first 6 videos, then we can actually move on, because we will have got this foundation. Then we can actually move on to building out systematic processes, which we start on idea generation, then moving on to gatekeeping, then moving on to risk management and self-awareness statistics. So the first thing we do is build this foundation. Once your foundation is strong, then we'll move on to the systematic process. So let's start with video number 1, the opportunity set.